Hello, traders out there in Traderland. My name's Dez here at Grok Trade Tuesday, January 11th, 2011. 1/11/11. Crazy. Anyway, markets ended up bullish today, but boy, we had crude and materials go sky high because of a report coming out talking about what we can do to offset or mitigate any major natural disasters due to oil spillage into the future, sends crude oil up over $90 a barrel. And we have the Dow up 0.3%, a little more than that on the S&P, and we're at 0.33% on the Nasdaq, Russell 0.4%. So bullish territory across the board. Banks ended the day positive by 0.5%. However, we lagged the markets, then we were leading the markets. The banks were all over the place today. Volatility index has dropped almost 4%. Gold up, US dollar slightly down, but not by much. However, we had transportation down, which takes away from the validity of the Dow 30 being up. All right, now, all that said, let's get into it. Let me share this right out of the gates. Thursday evening, 9 p.m. This Thursday, 2 days from now, 9 p.m. Eastern Standard Time, we have a free webinar. If you want to be a part to hear more about mentoring that's coming up in 2 weeks, January 22nd, if you want to know all about the mentoring program or you want to hear about it again, simply go to freeonlinetradingeducation.com. Scroll down to the bottom. You'll see a big, bright red toolbox. Next to that, you'll see a thing called Meet the Mentor. Click on Meet the Mentor. Fill out the form. We'll make sure you get a private invite. All right, here we are looking at the technicals. We were going up in this rising wedge formation on the S&P daily. With the S&P daily, I was talking about yesterday that we had this rounded top that I did not like. However, we had this tweezer bottom, we had a hammer, and I said chances of us going up today were probably pretty good. And I said, but we'd probably come up here and find resistance around 1277 to 1280, and sure enough, that's our high, 1277. And so we did go higher, we did hit our area of resistance. Tomorrow, if we decide to go higher, I see us going as high as this upper trend line. Now, that upper trend line would put us, oh boy, it's going to put us right around 1280 to 1283 as resistance. But I see us closing down below 1280 or around the 1277 mark. That's if we go higher. But what we see here with the bodies of these candlesticks is now that we pop back up, we're starting to do a choppy base at this moment. So we have a trading range in the last week or so, as far as trading days are concerned, between 1267 and 1277. You can see it between these two lines. Again, that's 1267 and 1277. It's called consolidation, and that consolidation at a high could spell bullish activity going into the future. Thing I don't like is the continuation of the bearish divergence on the MACD and the negative ticks that we have here on the histogram. But it looks like we're getting ready to get a crossover. With that crossover, we should see a positive tick. If we see a positive tick, look for some upside movement. Now, let me tell you what I am nervous about. When I say nervous, not technically, because I play what I see, not what I think, okay? So I want to be very careful here that to all you people that are uber bears, I don't want to give you any false confidence on your short positions. So let me be very clear here. What I don't like, what would not be considered bullish in the broad markets, is the fact that we have both materials going sky high, your commodities, your metals, we're getting big jumps in those, and our energy, crude being over 90, namely. That does not bode well for the future in the in the big picture. When you look at sector or group rotation, those things that get hot such as materials and energy, usually really usually denotes a high in the market, meaning that you should start to see a turnover or a rollover in the markets. Now, the thing that will fly in the face of what we're seeing there are two things. One, government intervention with the quantitative easing and the buying of the government bonds. That's happening by the billions right now. It's hard for the markets to drop when that's taking place. The other thing is, what is the other thing? I had two things. Oh, the other thing is the earnings. The earnings that's coming out should bode pretty well with all the economic indicators that we're receiving now. Should show some sort of increase or some upside potential as far as the economy is concerned, thus that we should start seeing some upside potential in the markets themselves. Now, there I'm going to leave it. So I said all that to say this. Chances are I'm expecting to see continuation above 1267 on the spider and below 1277. I could see shadows going higher, coming right back down, or shadows going lower and coming back up. However, the first time we get a significant move with volume above 1277, that would be a pretty bullish move, especially when we get over that trend line, or below 1267 on bigger volume, and I would expect some sort of continuation to the downside. So there you have it. Your path to better education should start here at Grok Trade, and I'm giving it to you free by going to the 101 trading videos. Now, if you have gone to the 101 videos, click on the little link right below the 101 videos. And if you haven't finished them yet, go back and finish them. It is free courses online that people charge for. I'm giving it to you free. So go there, listen to them, and I want to hear from you. Click on the link below where it says 101 courses at Grok Trade, and let me know how they're going for you. Give me some feedback. They go directly to me, and I want to hear directly from you. So if you'd be so kind, give me a thumbs up down there below, and also share us with a friend. Safe trading to each and every one of you.